Uh, Hi everyone. Thanks for tuning in to DoraHacks social media channel, YouTube, and also Bilibili. Today we're going to continue demonstrate great projects from Solana Hackathon. So the first team will be from Derify. And then Derify is a decentralized derivative trading platforms that allow you to speculate on any asset price. It claimed to be almost zero slippage cost and zero impermanent cost. Before I pass the time to them, let me share with you guys what's going on with DoraHacks recently. So recently, we are hosting a hackathon called US Summer Crypto Hackathon. And you can always check on our Medium post or just go to our hacklink.io to sign up for it. You can build your projects on 3 different hacks. It will be .hack, DAO hack, and Web3 hacks. It's going to be tackling the critical issues for the future development of blockchain. So yeah, without further ado, let me pass the time to Konstantin from Derify. Konstantin, are you ready?
Yes.
Sure.
I suppose I may start.
Yeah.
Okay. My name is Konstantin from the Derify protocol team. And Derify, as Rainy already said, we are a decentralized derivative trading platform, essentially a derivative DEX, and allows you to speculate on any asset price. And we have a innovative HAMM mechanism, or hedge automated market making mechanism, that allows you to trade with leverage, but with almost infinite liquidity and zero slippage cost, and also zero impermanent loss. And we also have an innovative PCF and a position change fee system that replaces the funding fee mechanism used by most of the centralized exchanges. And we can also give you a position mining chance for yield farmers and liquidity providers. And we have a leveraged high APY yield farming possibility for you. And for the team, well, we are a team that consists of experienced quant traders and blockchain engineers and professional service providers. And we have been providing quant trading and market making service for almost 5 years. And we are working with largest exchanges, including Binance, 4B, OKX, and MXC, and others. And we have really good experience and knowledge about derivative and trading. And our team has already developed multiple blockchain projects in past with some knowledge in public chain, smart contracts, and other solutions. And we also have a decentralized operation team that are working from Europe, Singapore, and China. And let's jump into our system that we have a hedged automated market making system, or you can also call it HAMM, and it's a specialized upgrade from order book and AMM. So it's like AMM, but it's not order book. So it eliminates slippage when you are using order book, because when you're using order book, it is very likely that your orders cannot find the proper match, so you cannot trade. And you will only be trading with the actual Oracle price. And that's why your liquidity is almost infinite, because you can always trade and make trades and find a proper market taker for you. And you will always got the price you see. And it's also very like AMM, but it's not AMM. So actually, there's only one position pool, so there is no impermanent loss because there's no imbalance between 2 different assets and 2 different liquidity pool. So you do not swap with the pool, but you only trade with Derify protocol. So the Derify protocol will calculate your remaining equity and or your speculation result. So you will withdraw your money from Derify pool according to your speculation results, but your trading activity will have no influence of the liquidity imbalance and with the liquidity pool. And also the Derify will calculate all the positions regardless of your its long position or its short position, and regardless of its leverage. We'll calculate them together and count them as our systemic risk. And because your profit actually comes from other people's loss, so Derify will actually need people to hold position to actually provide liquidity to the opposite position. So essentially, when you're making a trade and when you're opening a position, you are providing liquidity to everybody. So that's why we will also reward you for that. And the more people are trading on Derify and more positions are open, the better liquidity will be in the Derify system. And in order to encourage people to minimize the risk of the Derify protocol, we will also have this position change fee mechanism, because it will replace the founding fees. So it's only charged once. It's not like founding fees will charge you like at different epochs. And when a position is open or closed, you will be charged a position change fee or receiving a position change fee, because that's something happened between the people and the positions who are increasing the systemic risk of the whole protocol, and the traders who are reducing the systemic risk of the protocol. So when you are opening a position that increase the naked position or the systemic risk of Derify, you have to pay the PCF to other traders. And other traders are the people who open a position to reduce the total risk exposure of the system, and they will receive the rewards. And the reason why we need to eliminate the founding fees is because founding fee has some drawbacks that cannot be fixed as a derivative DEX. Well, firstly, because founding fees are only be calculated once in 8 hours or 4 hours. So between the two epochs of charging founding fees, the systemic risk of a derivative DEX, it is totally unhedged. So when there's any risk happen during the epoch, there's no way that a DEX can save itself or encourage people to do anything to save the DEX. So, but we have this PCF, it's charged whenever, and it can work whenever possible. So when there's a huge risk, so people will try to use the arbitrage opportunity to earn PCF, and they will like try to minimize the risk of the system. And also the second problem is that the founding fees will go on forever. And as long as you are holding your position, you will always got the potential threat of paying founding fees over and over again. And that is a bad user experience. If you want to hold a long position or short position for a long term, you will be suffering huge founding fee losses. So position change fee is only charged when you open or close your position, and it's very likely that you will receive both position fees as rewards. And so when you're opening position, you are receiving rewards, and when you close the position, you're also receiving rewards. So during the whole period of your holding the position, you have no cost. So that will give you the best user experience as you can imagine when you are trading with perpetuals and other derivatives. And also PCF has great synergy with the hedged automated market making system, as I said before. So I turn it back to the last page, because as said, the HAMM system need people to provide liquidity, and when you are opening those positions, and when you are using the position change fees, you are actually also providing liquidity, because you are opening positions to earn those position change fees. And also when there is an imbalance of two different positions, like there's a lot of long position in Derify system, and people will tend to open short positions in order to receive the PCF rewards. So it will also like help the system to reduce its risk. And also it synergizes well with the cross-margin account system, because the Derify system has a cross-margin like account. So all your margins will be calculated all together. So when you are using the two-way position mining system, which I'll be introduced later, and you will not suffer any PCF loss because you're opening two positions at the same time, and you don't have to pay any position change fees because you don't need to. And also when there is a imbalance of positions, the position change fees will also adjust according to the current risk exposure of the system. So it will be a very dynamic system. And now I can show you some of our prototype, some photos of our prototype. So that's what you see. This is the mobile version of Derify. It's really just like a centralized exchange. So you got a super great user experience, just like when you're using centralized exchange, but then you got better decentralized and a totally non-custodial experience, because everything's on chain. It's not that held by Derify team, and there's no way that your assets will be moved by others. So this is our trading our trading interface, which you can see. You can make long orders, short orders, and you can also make two-way positions. And also, this is also our trading screen. You can see we are using the cross-margin accounts, so you can have long and short positions at the same time. And also, you can check your trading history with all those photos. And our testnet is going to be released in very, very short term, so stay tuned for that. And also, this is also the interface when you are confirming your trade. So you will see the price, the type of your trading, and your how much and your volume, and the PCF you are going to pay, and the trading fees. The trading fees is super low because we are using the better blockchains like Solana or like side chains of Ethereum. So the price will be super low and the performance will be very high. And also for the, you can also set take profit or stop loss orders, just like when you're using the centralized exchanges. This is something that is really hard for a DEX to actually achieve. So let me explain about the position mining. So just like other people who got liquidity provider mining or LP mining, we have the similar system to reward people who provide liquidity to Derify. But we are a little bit different because essentially when people are staking their money into the pool, it's better that people directly open positions and start to trade, because when you are trading with the within the protocol, you are actually make better use of the liquidity or the liquidity mining money that you want to farm yields. So when you are opening a leverage position, you're actually providing more liquidity than you simply staking your money into a, let's say, LP pool. So that's why we have this special position mining, liquidity mining system, and to allow everyone who want to do yield farming or want to do liquid mining or other things, and we will give you this opportunity to use Derify as a great way to earn like farm yields and to earn like fixed income with almost risk-free farming rewards. And for position mining, it's simple that you open a position and you will start to collect results. As long as you are holding it, you will receive a reward every block and every epoch. And you can also have this special two-way position for position mining, which means you open both long position and short position with the same price, same leverage, same amount at the same time. But they only in different directions. So because we are using a cross margin model, so your two-way position will never get liquidated. But at the same time, you will collect position mining rewards from your long position and short position at the same time. So this is a great way for you to do a risk-free mining. And you can check that our position mining screen, where you can see your past balance and your past history of earning rewards. And also we have because Derify has the best part of Derify is that we have 4 layers of risk control, which is better than maybe almost all the DEX on the market. Firstly, we got position change fee, which is more like a dynamic risk control system when people are doing trading. Then we got position limits, which the system will automatically restrict you from opening extreme positions. For example, if there's only a million positions in the position pool, you will not be allowed to open 1 billion long position or short position, just because there's too much risk for everyone. And also we got the insurance pool, which we will inject our trading fee income to this pool, and it will cover all the risk overflow from daily trading and will guarantee to pay all traders. And we'll also get a bond system. Well, in most extreme conditions, because when you are trading on the centralized DEX in extreme conditions, even though you are making 1 million profit, it is very likely that you only receive half of it, because the centralized exchanges, they will automatically close your winning positions and you can do nothing about it. But Derify will promise you, we will give all your money and we will give all your money you earn, but just sometimes if the insurance pool cannot pay you off, we will issue the stable coin, the Derify stable coin, which is our bonds called BDRF, and we will ensure you always get paid. And BDRF is also backed by our daily income and other money. So this is the screen where you can see your position mining rewards and the BDRF you earn. And also you can see the EDRF, which is our governance voting token, which you will receive by staking our governance token DRF. And I think that's all for my demonstration. And thank you all for today, and time for questions, I think.
Hi, Constantine. I really enjoy listening to your project. It seems like a really mature project. Like you even have like double protection. You have the insurance pool, and then after that, in extreme situation, you will still be able to protect your client with the like funding, giving them the stable coin, right? Yeah, that sounds really interesting. Let me try to check if we have any questions from both of the communities from YouTube and Bilibili. Give me a minute. Are you guys able to hear me? I can't hear you, so you're mute.
Yes, yes, I can hear you. I can hear you.
I thought like nobody can hear me. I was like talking to myself. So just a minute. Let me check. Well, I don't see any questions from YouTube, but I did see a lot of good comments. Like they're saying like Solana is really good. Derify protocol rocks, and it's really exciting to see it live soon. You know, all these good comments. Let me check.
Yeah, it's true. Like, because Solana is built by traders for traders. And actually, we ourselves, we are like those traders, and we're trying to fix some of the problems with the current centralized exchanges, and we can complement them like with our like DEX and with a more decentralized solution, right? So that's why we choose Solana.
So I can tell that the way you design your project is really thinking from the trader perspective on like how to make them feel safe using your product and smooth as well. That everything is clear and you have different pools for different reason and different functions. Yeah. I don't see any questions from the Bilibili. So for now, I believe because you have give us a really good demonstration and an explanation of your project. So yeah, so I guess thank you for your time. I'll just pass the time to the next team to demonstrate the project for now. I think you did a really good.
Okay, thank you, Rennie. Thank you for your time and really enjoying talking to you. And bye. Thank you, guys.